Right, morning guys and girls. I'm just gonna keep up with these levels every morning. I'm a bit late this morning, but you can still monitor the charts today. So this is the daily levels. So you might want to let me just zoom in a bit. You might want to stop the video and just record these levels on the side here. So previous day value area high. You won't be able to figure out without the paid version of Excel charts or something. I'm still going to look for, there is a free version, another chart, but I'm not, I don't know it so well, so I'm just going to sort of research it, and then I'll give you a platform where you can actually get these previous day value area highs. So there's the previous day high, you can figure that out, and the low and the equilibrium using your Fibonacci. And then the previous day value area high, the previous day point of control, the daily open you can also figure out like I showed you, and there's the value area low. I'm just going to pause this video and then I'm going to add in all the other relevant levels because it's quite a tedious process. I don't want to make this video too long. Right, now we can continue this video. Starting from the top, there's a single print there. I thought maybe I can show you these single prints. Let me just bring it in here. I hope you can see it. So this is that EXO charts that I use, and I just wanted to show you a single print. So when something moves, or when the market moves really fast, if you look up here, that is a single print. Those little blocks, there's only a single row of blocks. So you'll see there's a second block because that red wick came down, so it's time spent in that on that price range. So I don't 100% understand this, but I know how to react and the consequences of a single print. So there you can see there's 3 blocks because this one came down, so there's 1, 2, 3, and that's why there's 3 blocks. So, and there it goes on, there's 4, and you can see how this forms, and that's how you also figure that's the value area. The highlighted is the value area of that session, of the New York session, and that little gray line is the point of control. And now you can see how I get it, but the previous day point of control is not a session point of control. So when we do scalp trading, we use these sessions. Now the London, I know, opens at, well, now in winter 10 o'clock our time, and in the summer it's 9 o'clock our time. So I have alerts set for these times because there's always, not always, but normally quite a good reaction. You see when New York opened yesterday, a big push up there. And that little pink line there is the initial balance. So that means where New York opened and the first move before it changed direction. So from there you can see that week where it opened there, it went down the first week, and then the second week, that's where that's the initial balance. So I've marked that on our charts as well, but I hid it. It's hidden. I'll just switch it on and off for you quickly. But the single print that I wanted to explain, so here they call it a buying tail here because when it's at the bottom of the range it's a buying tail, and when it's at the top of the range it's a selling tail. But when it's, let me just look for here's a single print, but when it's in the middle then it's a single print. So I might as well just show you here. So then we went New York, we went to the close session, we went to the Asia session, and look what happened here in the Asia session. It came down, it nearly closed that, so that means the single print was closed down to just that bottom part. And then the London session, let me stand on the red line, it basically closed that single print. So the single prints act as magnets. So I'm just going to leave that on your chart. So that's not for swing trades, it's for smaller trades, day trades, or scalp trades especially, if you're interested in that. That said, if you zoom out a bit and you look at these big, well, there's a big single print, so I've got that one. You'll see that on my chart. So I've got that one marked, so there'll definitely be a reaction, but you always wait for the top. There's normally a reaction off the bottom, so that's for a scalp trade. It won't swing seriously back, but it'll react off the bottom and it'll try again and it'll go through the top. You have to watch the reaction. Sometimes it reacts and it just rejects off it, like we saw here. There and there, serious rejection. That's like a swing trade up there. And then where did that stop? Yeah, look at that one react exactly off of that single print there. It's really powerful stuff, this. If you go deeper into the charts and you start looking at these tools or paid platforms. Okay, back to our chart. That was quite a deep session. So yeah, that's the single prints. And there's that single print that I just showed you, and I marked the top with a line as well because that's the serious reaction. So look at that reaction. And, that was our previous day high as well, but the only level was it hit those single prints. Serious reaction off there. Let's just look at what that percentage was. That's a 2%. You know, if you trade on 10x leverage, 20% is a, well, to me that's big. That's a big trade. Okay, so let's continue. I'm just going to zoom out a little bit to see all my Fibonacci's. So that's not relevant, that's just those trades I missed. I'm just leaving them there for reference, because I take that quite seriously, the trades that I missed, and I try and figure out, and I back test. When there's no action here, I go back to those and I try and figure out what went wrong and how I can fix that. So this Fibonacci is still relevant, because that's the very high and the low, and we're in the zone in between there. So that reaction, we can watch that reaction today off that Fibonacci. And the anchored VWAP is quite far away. Now this one is closer. Let's just wait for it to load. Just remember that it's at the previous day low, so there's a confluence there, so we can expect a big reaction off that level. I'm just going to switch that off now, and that Fibonacci, another anchor, that's at the top, I think. Yeah, that's not, oops, let's just leave it in. See how that's confluence with that single print there again, so you can mark that level, and you see I've got an alert set for there as well. That's quite an important level. Yeah, my long position, I'm still obviously in that trade with about 30% left. If it happens during my waking hours or during the day, I'll probably take another 10% there and pull it down to 20%, because that's basically, I think, a 70% profit for me up there. Okay, close that down. Next Fibonacci, yeah, this one is also still relevant. Watch this reaction. So this previous day low will be quite a reaction there and down there, so we must watch that. I think that's with the anchored VWAP. Was that correct? Yeah, so you can see that Fibonacci, anchored VWAP and previous day low, so you can watch that level for a rebounds, but watch the reaction. I mean, if we drop down, then we're definitely going to come down here. Look at all these levels here, there's big confluence here, and if we miss that, we might have a small opportunity of that value area low catching us there. Otherwise we're going to drop quite hard, quite far. Another Fibonacci, where's that one? Well, that's for the top. You can see that the top, why we reacted off the top there. That's Fibonacci not relevant now. That one as well, my trades missed. This one is quite far out. And then the higher time frame levels, the daily levels, daily and weekly levels. So you know how to get those levels. So you can see there's a daily level on, so there's 4 confluences there on that level there. We've got a new daily, maybe I must just zoom in a bit, that I put in here. There's a weekly on our previous day. That's why there was quite a reaction there. I can't see the other daily. Well, there's a yeah, but I mentioned that daily there. You'll just have to figure that out yourself. Daily, and the top there's also a daily level there, so we can expect, and that single print, so we can expect another reaction on the top of that single print there. And then the merged ranges, let me just check that. Merged range is for this merged range there. Let me just zoom out a bit. I've got that on my previous videos. The point of control is still the same, so there's a big confluence here, strong resistance there, and there's the value area high is up there. I think we just reacted off that as well this morning with that previous day equilibrium, so that's why we had a reaction there. You can see how simple it becomes, this charting. You know, the only thing that lacks now is the conviction. When it gets here where there's 4 confluences, you can't just enter there, it might push down to there, but then you've got to watch the reaction. on the volume. I know that doesn't quite make sense yet, but if you go on low leverage, then you can enter there and just put your stop loss there. So if you're wrong, it gets stopped out there for a small loss, but don't put your stop loss down there, because that's a completely different level. So rather get stopped out there, and then you can enter again when some of these levels. But when I didn't have the volume platforms, I would normally just take the middle of that. So there's your top level, there's your bottom level. So I would just when it touches, like for instance the 618, if it is if it turns early, front runs it, then I miss the trade. But I don't want to just jump in anywhere. I'll just leave it and wait for then I'll wait for the top, maybe around there, set my limit there to enter the market for a short. But there is a very small stop loss, so I'll have my stop loss just there. Just give it a little space for it to wick through, because it never just stops exactly, well, not never, but it normally wicks through it. So there was a perfect stop on it, but I'll give it a little space, but small, so you don't have big losses. And always remember your maximum risk is 1 to 3%. So really go small. And the best is just to, after you've had success with paper trading, you start with $1 trades, just $1 trades. And on there, still your stop loss is, there your stop loss can then be 10 or 15%. But of your total portfolio, never more than 1 to 3%. But just so that you get the feeling of trading with actual money, just $1 trades. You do many of those, like I'm talking about 25, and journal all your trades, and then you'll start seeing where you got success and where you got failure. And then it's just psychological to push that number up. So I've had many successful trades, but it doesn't show in my portfolio because the cost of the trade, the levies, that all pulls it down. So I don't have a huge movement on my account, but it starts building your confidence so that you do the right trades at the right time. And just look at the percentage gains, don't look at the amount of your account, and that will give you a lot of confidence. Okay, so I had a lot to say about that now. Let's just move on. So the previous month levels are far away, and the weekly ones, I've given that to you. Previous day we've just done session naked point of controls. It's only this one down here. Let me just show you again where I get the session point of controls. Those are the session point of controls there, but that's not naked. So a naked session point of control is one like here that's set and it's not touched, but it's exactly the same as the single prints. It serves as magnets. So there was one there, and see how it came down and tested that again. So once it touches here, this one will stop like there. It touched there, so that session point of control then is not naked anymore. When it hasn't been touched, it's naked, and it becomes quite a magnet for the market. Let's just go out a bit. And there's quite a lot of data on this chart, that's why it takes so long to load. You see there we've got a session above us as well at 46, but those are all marked on my chart. So when we get there, I'll show you 46. There it is, naked session point of control. And then you get a naked daily point of control as well. So I'll just show you that as well on this chart. So it's this one. Also these exo charts. So exactly the same. That was naked until it was touched. That was naked until it was touched. So it's a daily chart. This. So there we've got a new naked daily point of control above us. So also a lot of charts. So there I've got all those marked. So those are very important. This is powerful stuff, these levels. Okay, so I've got them marked. So I'll see how we hit that this morning. So that's not naked anymore. Or yesterday, during the night, last night we hit that one. So I'm just going to keep it for a while longer. It was set there because sometimes they keep on reacting. The same with this naked one. That's the one I had hidden on my chart, and a big reason why I missed this trade. I'm just going to leave it. It is hit, so once it's hit, it's not naked, but sometimes it comes back and that level stays relevant. So if it comes through there again and it goes deeper, then I'll remove it. Then I know it's not a relevant level anymore. And then the TPO range, merged range. This video is becoming a bit long, but I just want to show you how I do that. It's also on this exo charts. So what I go, this is the daily session, like from 2 o'clock in the morning until it just resets 2 o'clock. That's the start of the day, the official start of the Bitcoin trading day. So what I can do here is, you can see this is the session starts. So there was you see this one is longer, that one is short, that one is longer. There was a hiccup with XO with the data that day, so all the data wasn't recorded. Bit of a problem when you trade, so you basically stop trading when that happens. I'm just going to remove those lines, and I'll show you when I double click. That is the current day, so that was yesterday. So if I double click on there, I get an option to merge, and then when I click on that one, it merges with the previous day. So I'm not going to continue doing that. So what I normally do here, or what you should do, is you'll see from there on the 5th of January, remember we got that on fixed range as well, and then on here we get a bit more accurate data. So I merged all these days together, and that's how I got that merged range. Just wanted to explain to you TPO, merged range. So what TPO stands for is time price opportunity. So a lot of data in that, so that's why I've got it here, TPO, time price opportunity range, merged range from the 5th of January. There's another level, but it's out of our range, so very important, this level down here, and the TPO and our range point of control is nearly the same, so very important levels there. So this morning as well, I just want to zoom in a bit to show you, just before I started making the video, we had a good reaction off the VWAP. You see there, we came up to the VWAP, close to the VWAP, rejected, came down to that TPO range value area high. That's why that's so important. Look there, that level there it went through, touched again. Very important. Use these levels. Remember to start paper trading, and then as you gain confidence, you start using $1 trades, and then you start moving it up to $10, and then you're fixed, or you can become a trader. Right guys, that's enough rambling on for a long time again, but I get so excited to share the knowledge that I've worked so hard to gain. And the market is so big, and I think the more people that got the knowledge, the more traders in the market, the more money there is in the market, and the more how can I say, consistent crypto trading will become. I just wanted to check on the other trades here as well. So very excited that my Luna spot trade is in profit now. I bought there, so I'm just in the green there. Dot as well, really doing well, so I'm into the profits there. And remember, I took profit there. We're just above there now, but doing really well. Hoping to push up to my take profit too, maybe today, later, or tomorrow. Solana, another big mover was Cardano. I'm really excited about that, because you see how, I remember I showed you 2 or 3 days ago this resistance line there, and then we broke through, and I think we were here coming down, and I said to you, we need to bounce off this line to stay bullish. What a perfect bounce. So mark this line. Remember, this is that pitchfork that I've got, the bottom of the pitchfork, I think. Yes, there you go. Let me just get this pitchfork and tell you which one. I think I showed you which one it was. Settings, it's the modified shift pitchfork, so it does change a lot when you use another pitchfork style. You can change it there. Shift, modified shift there. Okay, alright. Beautiful move there. Link is not, Link is, it dropped a bit, it made a recovery, so it made quite a nice pump up there, and now it's made a recovery. So let's just see there where we are. No, that's not, well, we're nearly pushed down to the, on the altcoins we normally find the 7, not normally, many times we find the 786 is also, if it pulls down quite hard, then the 786 comes into play. But that's a healthy pullback, and now it goes up, retested the 618 level, and we're going back up. So yeah, I think that's a good move. So Link is my biggest holdings is Cardano and Link in spot, and then I've got smaller holdings. So Cardano and Link together are half of my holdings, and then all these other marked with green are the rest of my holdings. The other half, yeah. So Engine moved well yesterday, basic attention token. So basic attention token is this Brave. They own this Brave browser there. So I'm obviously using Brave browser, and I think because they've got a very good use case that I've got a big eye on basic attention token. Algo, I think they moved yesterday. No, not big. Luna made a nice move. Yeah, obviously I've just showed this. Graph token, it's just moving up. So it's made a new high, or higher high, higher low. We needed to not go below that one now. We needed to turn and go higher. So let's just check that Fibonacci in there. See where it needs to turn. Yeah, it can still drop. If it turns on the 382, that's very, very bullish. So let's hope that's going up. Hope. Should never hope on the charts. And then these blue ones that I've added, I'm just saying we have to watch them. So I had a big trade in Atom, and I closed it. I pushed my stop loss up into profit, and I closed it around there, and it's probably a mistake. Not probably, but I should have seen this big pullback onto the Fibonacci there and entered there again. Even there was a pullback onto the Fibonacci. I just had it way down because it's just an emotional thing when you had so much hope on the token, and then it disappointed you. But I should have just hung on to it. And then Aave, I think this is also a DeFi project, so they've also started. It reacted quite well here, nearly off the weekly. But let's see how it does. Oof, it's a long video now. Right, you must put it on fast forward when you watch it. Alright, cheers guys, bye.